And good morning, good evening, good afternoon, students and traders all around the world. This is FXFreedom broadcasting you live on YouTube. How is everybody doing? And this is Forex Trading Course 101, everybody. Today it's Trader Psychology Series Part 2. And remember, trading is a learnable skill when we learn in the correct way, the MST, right? Since sounds like a bad syndrome, but it's really not, everybody. M stands for the market, S stands for the strategy, and the big one, talking about the Trader Psychology Series, we're talking about the trader. The trader is the big one, right? You can follow us on YouTube, youtube.com/c/FXFreedomFX. And everybody, we are almost finishing the course. This is why the Trader Psychology Series is one of the last topic for this year. And never forget, you are going to graduate from this course when, number one, you have your chart set up and ready for trading. Number two, you have your strategy in place. You understand how and why you win, why you lose. And number three, you have a complete understanding on how this market works, so you can make an educated prediction, long or short for the day and long for short for the week. Also remember, 90% of traders lose money in the Forex market worldwide. These streams are not trading or investment advice. And remember, if your way is not working, why don't you try ours? For homeworks and questions, you have my Gmail contact, Skype contact, and you can follow me on TradingView, where I was not that active this year. Hello, how are you? Al, I'm sorry I didn't have time. I'm going to send you the free ebook today. Okay. Now, pictures. Get this one, everybody. Trader Psychology. So this is still my old nickname by FX Passion. Then we change it to FX Freedom. Right? It's psychology. It's also a psychological trick. Yeah, I'm sorry I didn't have time yesterday. I didn't forget, Allah. I'm going to send you the ebook today, alright? So, everybody, it's not about the chart. It's not about the chart. It's not about the system. It's not about the strategy. It's about you and how you interpret the chart, psychology, beliefs, and number two, what action you take upon your interpretation of the chart. And again, we're talking about psychology and beliefs. You can have two different traders looking at the same chart. One is going to perceive the chart as a threat. The other one is going to perceive the chart as an opportunity. This is what this picture is trying to explain to you. It's not about the chart, it's about how you interpret the chart. Do you see threat or do you see opportunity? Make sense? Is now the right time to enter the market? It's not the right time. I'm going to hesitate, I'm going to double guess, I'm going to triple check, whatever. There is no right or wrong, but it's not about the chart. It's about how you interpret the chart and what action then you are going to take upon your interpretation. Yesterday, what we learned yesterday, right? Did you work on yourself, Allah, and everybody else? Did you work on yourself? We talked about the first three mind traps. The last one was, I want to be right, therefore I'm afraid of entering into the market because I can lose. The correct mindset, I know that I can have losing trades. I also know that I don't need to know what is going to happen next on a trade-to-trade basis. I will make money in a series of 10, 20, 30 trades. Good news, trading is a learnable skill. Bad news, 90% of traders fail. And here is the big secret. Why do traders fail? I know what I should do, but for one strange reason I'm not doing it. Right? And then behaviors of someone who wants to secretly, subconsciously lose. This was also a mind trap, self-sabotaging behavior. You are not going to respect the rules. As a matter of fact, you are going to break most of the rules. Entry, today I don't have time. Thanks for being honest. Entry rules, trade management rules, risk rules, trade exit rules, strategy rules, journal your trade rules. Right? And we talked about beliefs briefly. Rich people are bad people. Type of here, life is difficult, we need to struggle, money doesn't grow on trees, and so on and so on. Any questions so far? Any question? Any questions? So let me see, this is chapter 3, your trading plan. I need to make money. Number 4, maybe creating false expectation. I need to make money. So let's continue with number 3, everybody. In the meantime, if you have a question, please feel free to type in. Psychological concept to internalize. We need to have or create real expectations. Everybody, when shaky trades come along, no, it's a fantasy name, it's not for real, I'm inventing names. If shaky trades comes along, everybody, or the JP Morgan super unicorn robot comes along, and they're telling you that you are going to become a millionaire in 1 year. Is this, and you believe them, right? You believe them. Here is the question, are you or are we or are we not creating false expectations? Right? Who would not pay 10,000 US dollars for 1 week course because they are telling you you are going to become a millionaire in 1 year? Right? Me too, back in time, 20 years ago, I fall prey to all of them. Systems, strategies, courses, you know, spend ton of time and money. Right? Yeah, fair enough, maybe I'm stupid, right? Somebody, oh, maybe you might be stupid. Maybe I am. Nothing worked, nothing worked, nothing worked. Right? Allah, if I'm telling you, Allah, you are going to be a millionaire in 1 year, and you believe me, are you making... And again, here is the question, boss, how do you know? Look at the numbers. Check the numbers, everybody. Always check the numbers. Yes, numbers don't lie. If this would be that easy, everybody would be a millionaire by now. Your Uber driver would be a millionaire trading the Forex market. Your gardener would be a millionaire trading the Forex market. Everybody would be a millionaire if it would be like this. Agreed? But we know that still today, 2022, almost 2023, 90% or 85%, still a big number, you know, plus 85 plus, lose. Make sense, everybody? In our modern world, there are a lot of false expectations. One of the false expectations is that our IQ, how intelligent I am, our diploma or graduation or MBA or doctorate degree will help us make money in the financial markets. We talked about this yesterday. Financial markets in many aspects are upside down. So unfortunately, in the financial markets, whether that is the stock market, options market, or the Forex financial markets, these things are not going to help us. There have been countless examples of doctors, lawyers, architects, and other successful professionals entering the era of financial markets because they thought that if they were successful in their area, their job, then they logically are also going to be successful in the financial markets. There is a reason why the incidence of the failure of those who try to become professional traders is 95%. Worldwide, among all the people who will try to live and earn an income from the Forex market, only 5% will succeed. Maybe 10 right today, I don't know, I didn't check the numbers, but still a big number. This is the reality, the numbers don't lie. So we need to create realistic expectation. For example, it's not going to be easy, that we are going to make mistakes along the way. We are going to have losing trades. You are going to draw down, okay? And that it will take a time. We are delusionally smart. When we delusionally start to think that we can study how to trade the markets and how we will get rich within 1 year, we are creating false expectations. Just look around you. Hello Julius, how are you? False expectations, right? Now, what would be a realistic expectation here? You are going to graduate from this course when you have your chart set up and ready for trading, you have your strategy in place, you understand why you win, why you lose, and now you don't need to make consistent profits. And number 3, you have a complete understanding on how this market works, so you can analyze the market and make an educated prediction. See here everybody, it's going to take you approximately 1 year, if not more. This is a realistic expectation. You need 1 year or more just to understand market structure, highs, lows, trends, trend line, support, resistance, not to talk about all the different stuff in multiple time frames. How the monthly is connected to the weekly, how the weekly is connected to the daily, how the daily is connected to the 1 hour, 2 hour, 4 hour charts, and how all of those are connected to the maybe 15-minute chart and 30-minute chart. It's going to take you 1 year, if not more. Boss, what would be a realistic expectation for me to make money? Great question. So, if we talk about consistently profitable, this doesn't mean that you are going to have winners. You know, the numbers are there, everybody. This starts from the, you're not going to like the answer. This starts from the 3rd year. Make sense? You are, no, statistically we have the numbers. The super traders who manage to start to make consistent profits, the start is from the 3rd year. Forex course 101 included, yes sir, yes sir. Okay, so you're going to spend 1 year to understand, or more, to understand how this market works. Forex course 101 is the analyst part, and then you are going to spend 1 or 2 years, so 1 already from the Forex course 101, then you are going to spend most likely 1 or 2 years in the advanced course. And if you are going to listen and do the homeworks and use the institutional tools, good news, trading is a learnable skill. In the next 2-3 years, you are going to become a professional trader. Bad news, if you are not going to do the homeworks and listen and work and do the repetition, bad news, you are going to fall in the 90% of traders, or in the 20% of traders who never finish the course. Oh, it's too difficult. Or you are going to maybe become one of the 60 who finish the course but no significant change in the lifestyle. Okay, so homework, what are your expectations? Okay, homework, psychological homework. Everybody, if you don't journal, start journaling. Okay, so homework, we are going to be back. Let me check, everybody. This is our last class for this week, so here we are on vacation. We are going to be back segunda, terça. We're going to be back Monday, Tuesday the 20th. December 20, we're going to be back with the next Trader Psychology Series Part 3. Okay, and then we're going to move forward and hopefully finish this course for the year. Okay, so what is the homework? Journal your expectations for the trade and figure out your expectations about this profession, meaning professional trader. Okay, homework, everybody. When we are back December the 20th, I'm going to ask you, hedge fund trader Julius, what are your expectations about this profession? Professional trader. Hedge fund trader Ala, same question. What are your expectations about this profession? How many years, how much time do you give to yourself to become a professional trader? Okay? And journal your expectation for the trade. Make sense, everybody? Boss, what do you mean journal your expectation for the trade? When you enter the market and you hope that is going to be a winner, you expect the trade to be a winner. Make sense? Well, well, don't everybody expect that their trades are going to be winners? Of course not. Professional traders, we know that we can have losing trades, so we don't expect anything. Big one right now. Make sense, everybody? Journal your expectations for the trade. What did I expect my trade to be a winner? Sometimes we are not sure what we are doing, or maybe I entered prematurely, or maybe I entered too late and I'm expecting that the trade to be a loser. Make sense? We as professional traders, we don't have any expectations on a trade-to-trade basis. Make sense? Why not? Because money, it's a consequence of a well-executed strategy. Okay? Let's write this down. Copyright Forex Freedom. Right? FX Freedom. Best quote, best quote, best quote. Money is a consequence. Consequence. Money is a consequence of a well executed strategy. Of course, that has an edge, right? If the strategy doesn't have an edge, then it's not going to help us. Freedom best quote. Money is a consequence of a well, typo here, not will, well executed strategy, and not the reason to enter the market. And not the reason to enter into a trade. Boss, don't you want to make money? I'm not making the money, the strategy does. See how this goes, everybody? Do you understand? You have now a glimpse into the challenge. I know what I should do, but I'm not doing it. What are my expectations? I'm expecting the market to be I'm expecting the trade to be a winner. Professional traders, money is a consequence of a well-executed strategy that has an edge and not the reason to enter into a trade. Boss, but you're entering into a trade to make money. The strategy makes the money. The strategy makes the money. Make sense? Beginner trader understanding and professional. So one more for today, everybody. Yes, you can send this video, share this videos, this recording with your friends and family. Everybody, you have friends who are trying to make money for years. Share these lessons with them and tell them, oh, maybe here this video is going to help you. Maybe here you're going to find the secret. Okay? So here is the wrong mindset up in here. Wrong mindset. Here is the correct mindset. What is the wrong mindset? Wrong mindset. Okay? I am making the money. I want the money. I am responsible for the money. Okay? All of those, everybody, it's normal, but all of those, yes, all of those quotes or sense are not the correct mindset. I'm making the money. No, no. The strategy makes the money, not you as a trader. The strategy. Whoops. Cancel, edit label, one more time. The strategy or system, right? Strategy, system. The strategy makes the money. Our job is just to execute the strategy rules. Two different mindsets, everybody. I'm making the money. No, the strategy makes the money, not you. You are just executing the rules. So if the strategy makes the money and not you as a trader, and you see your strategy is saying that you need to have a counter trend line break with the bullish candle, and you have a bullish candle but no counter trend line break, and you enter in here, your strategy is telling you, before you enter the market, example, wait for a counter trend line break with a bullish candlestick formation, and you have a bullish candlestick formation but you don't have a counter trend line break. Are you executing the strategy rules or are you after the money? If you can understand this, everybody, if you can understand this from today, then I did my job as your coach. Freedom, can you repeat please? Yes, sir. So, money. Now, remember, we started in here. Switch one, control over thing. We started here, creating false expectations. And then was the homework, journal your expectations for the trade. And then we talked about that we should grow up and understand how this business works, and understand that money is a consequence. If your strategy has an edge, money will come. It's a statistically proven fact, makes sense? Money will follow. Okay? Money is a consequence and not the reason to enter into a trade. So, if my strategy makes the money and my job is just to execute the rules, typo again, I'm sorry, and my strategy is saying enter the market with the bullish candlestick formation and the counter trend line break, and I have a bullish candlestick formation but no counter trend line break, am I trading the strategy or am I after the money? I want to make money. Me, it's me. I am making the money. If you can understand this, it's not that easy. If you can understand this from your trading, boss, but the market's moving up. The strategy, see how this goes? But the market is moving up. Right? Example, in here everybody, Canada CHF, right? Canada CHF, 4 hour chart, just give me a second everybody. Canada CHF 4 hour chart, maybe not the best example, daily maybe, daily, there you go. Okay, Canada CHF daily chart. Just an example, your strategy is telling you go long only when the market crowns on the daily. Okay, go long only and if the market crowns on the daily, so this would be the price level 0.7150, but then what do? We go on the 15-minute chart, or we go on the 4-hour chart, like this. We go on the 4-hour chart, we see a mini crown, left tip, center tip, right tip crown. We are seeing a mini crown and we are entering the market. Oh, there is a crown on the 4-hour chart. Yes, it is. Here is the question. Are you after the money, or are you trading and obeying the strategy rules? Type in the chat, everybody, I'm after the money, or this is why this profession, it's not difficult, but it's complicated. Why? Because boss is telling me, right? Boss is telling me what I should do. Arrow here. Boss is telling me what I should do, but for one strange reason I'm not doing it. I should buy the daily crown at the price level 0.7150, but I entered because greed has its need. I was greedy and I entered on the crown on the 4-hour chart. Oh, but there is a crown. Yes, it is, but your strategy is telling you to buy on the daily. Can we change our strategy? Yes, you can. This was just an example, everybody, on how to understand your trading in the advanced course. So one of the benefits on the advanced course, your trading is going to show me and you, if you understand that your strategy makes the money, or is going to show us that you are after the money, you don't get this profession right. So we need to work on yourself. Julius, I'm after the money, not following the rules. Are you still in a trade, Julius? Going long Canada CHF? Another one, sure, another one. Another one, what would be another one? 2-hour chart, maybe another one, not 1-hour chart, maybe 1-hour chart, right? 1-hour chart. 1-hour chart. We have here just an example again. We have the Fibonacci in here, you know, and orange went to orange. Orange went to orange. So here, right, this would be the example. So enter in here and stop loss down in here, right? So this would be the entry. Enter in here, this would be the entry, stop loss below the A, and then this happens and you close the trade. Make sense? The market, instead of moving up, went against you. You got scared, which is totally fine. You got scared, and instead of leaving the trade, you messed with the stop loss, you closed the trade in here, and as soon as you closed the trade, the market went your way. Still, you were after the money. Money, it's not money in the financial markets. Money is raw material. Okay, any questions so far? Next. False expectations. Mind trap number 4, the need of having control over things. Psychological concept to internalize having control over things. It's an illusion. Illusion. Feeling and thinking that we are in control of something gives us the feeling of security and the feeling of being safe. Everybody, Julius, can you control your wife? Hedge fund trader Alak. Can you control your wife, everybody? Or if you are a woman, everybody, Shola, hedge fund trader Shola, can you control your husband? Can you control your kids? Yes, until certain age, right? But not 100%. We learn in life that in order to succeed, we need to have control over external factors and life in general. We usually learn this concept as we grow up, and the truth is we actually do have some degree of control over our life. No, I can't, Julius. Sure. So when we are young, we are trained to study hard enough so we will have good grades. We also learned while we are young that we can manipulate people, even when we are babies, to get those things we need and want. When we become adults, we enhance our leadership skills that also give us a certain degree of influence, aka control, over those around us and the factors influencing our life. Everyone likes to feel that they are in control of something, because feeling and thinking that we are in control of something give us feeling of security and the feeling of being safe. As we said, is one of our primordial impulses. Everybody, can you control the market? Can you control the market? Is the market going to go up and down just because you plot the Fibonacci and have your stochastic and Ichimoku and God knows what? Market can do anything it wants, when it wants, for how long it wants. Yes, sir. Nobody can control the market, everybody. Make sense? And don't fall prey to teachers and YouTubers telling you that central banks are controlling the market. Not true. Not true. When a central bank changes the interest rate, the news event has a statistical effect up to 7 hours. Everything that happens in the market after the 7th hour, it's not news related anymore. We learned this too. Okay? The Forex market is too big. Make sense? There are no manipulations in the Forex market. It's too big. Too big. And if you don't believe me, go check the numbers, everybody. Oh, I don't believe you. I love the non-believers. Those are the best students. Make sense? If you don't believe me, this is all good. Go check the numbers. How the banks are manipulating the Forex market. It's a hoax. Not true. And so this is the Fibonacci talking about. So we cannot, right? We cannot force the market to do anything. We don't have any control over the market. So what's the correct mindset, you know? Wrong mindset. I control the market. I control the market. Or the banks control the market. Not true. You know? This is the wrong mindset. You know? What is the correct mindset? The correct mindset, I have control only upon myself. Big one too. I cannot control what Canada CGF is going to do today. I cannot control what Canada CGF is going to do tomorrow. There are statistical approaches, probabilities, but I do have control upon myself. And this is it. No signal, no entry. Or also signal entry. I can control myself. I have control upon myself. The strategy makes the money. I just need to execute the strategy. It's that simple. But they say some are market movers. Shola, this is from the stock market. Don't believe them. There are no market movers in the Forex market. Okay? Sharks and whales and market movers are in the stock market. Some company or somebody has 51%, okay, and he or she or the company is moving the stock. The Forex market is too big. It's too big, everybody. I'm going to go on Google right now, you know, Forex market, daily trading volume. Forex market, Forex trading statistics. Give me a second, everybody. Forex.com. Give me a second, everybody. So, where is the number? What is volume? So, Forex daily trading volume is approximately 6.6 trillion. Everybody, trillion, 6.6 trillion daily. Can you understand, Shola? No government is going to put 6.6 trillion daily. And this was from 2019. See, everybody, don't believe BS YouTubers and teachers and gurus. You know, oh, there is a whale in the Forex market, or the banks are controlling the Forex market. It's too big. And because it's too big, it's also just. Make sense? No company, no government is going to put, and remember, this is daily. One day, 6.6 trillion per day. If you don't believe me still, you know, go check the numbers and statistics, whatever. Next, I need to make money. We talked about the need of having control. So this is a big one. Psychological concept to internalize. Money is a consequence of a well-executed strategy or trade and not the reason to make the trade. Ironically, everyone at the beginning thinks that our goal is to make money. Agreed? Me too. Back in time, I was thinking that my goal as a trader is to make money. At first blush, this seems logical, but the goal should be to execute good trades because money is a consequence of profitable trades. If we execute good trades, we will make money. If we execute poor trades, we will lose money. It is as simple as that. Understand that executing a trade has nothing to do with money. This is a big one. It takes some time for us to really understand that executing a trade or executing a strategy has nothing to do with money. Why not, boss? Because money, it's a consequence, not the reason. Type this out, write this down, and read this every day for the next 90 days. This is a fundamental concept that needs to be internalized. The money will come in or out of our pockets as we trade. The goal is to execute good trades, everybody. Trading has nothing to do with money. Here is a good starting point of what it does have to do with. Trading has to do with identifying patterns. Has to do the right setup before entering the market. Has to do obeying our trading rules. Input signals, indicators, strategies, and other things that increase our probability of a trade to be a winner. Nobody knows for certain if a trade is going to be a winner or a loser, so we must work and concentrate on trading correctly and improving our skills to the point where money is merely a consequence. I have read this book cover to cover, great stuff. Eddington, I'm not sure if I thanked you online. Everybody, Eddington helped me with the book. He is the editor. Everybody, give an applause to Eddington. Applause. Thank you very much, Eddington. Eddington was the editor, I believe, so he was correcting my poor English, everybody. And he built the design. Thank you, Eddington, so much. Okay, everybody, so you need to internalize this. I need to make money. You need to execute. One more time, right? I know what I should do, but for one strange reason I'm not doing it. We talked about, when we talked about strategies, we talked about that what is an edge. Yes, everybody, if you need help, just call Eddington, he's going to help you. Okay, he's a great guy. Talking about the strategy, everybody, I need to collect 100. Remember the rules of the strategy and the edge? What is an edge? An edge is a statistically proven fact that my strategy through time is going to produce, is producing more winners than losers. But in order to have an edge, I need to do 100 trades. I need to collect 100 samples in the same way, same entry signal, same trade management, same risk management from the strategy, and same exit. What? Wait. Just joking, just joking. Okay, so here is me, you know, I'm telling everybody you need to collect 100 samples, you know what you should do, but for one strange reason you are not doing it. What are, everybody, what are the 20 and the 60 doing still today? Changing strategies. Changing strategies. You know, if you understand that money is a consequence of a well-executed strategy with an edge, and if you understand to have an edge or not, you need to come to 100 samples. You know, not 1, not 5, not 15, not 37, not 42, 100. And you trade your strategy and you have 5 losers and 3 winners, and you have the next 6 losers and 5 winners, and you say, oh, what the heck, this strategy doesn't work. And you change your strategy. How many of you still today are changing strategies? Don't tell me no. I know some of you. Don't tell me no. You know, Marcus Wise, 8 years. Oh, I'm going to go on the 1 minute chart. Man, you've been on the 5 minute chart, 15 minute chart. Oh, I'm going to change the strategy. The strategy is not the problem. The strategy is not the issue. You changed the strategy 100,000 times already. It's not about the chart. Right? Oh, I cannot see the chart clearly, or this strategy doesn't work on the daily, on 1 hour. Still changing strategy, still today. Strategy is not good. Everybody, how many of us, we're all the same, how many of us, we were on the monthly chart, we were trading from the weekly chart, we were trading from the daily chart, we were trading from the 1 hour, 2 hour, 4 hour chart, 15 minute chart, 5 minute chart. Nothing changed. Nothing changed. We've been all over the place. Nothing changed. Why not? I know what I should do, but for one strange reason I'm not doing it. Institutional traders, we know that you need 100 samples at the minimum. More 200, 300, the minimum 100 for you to say, oh, my strategy has an edge, my strategy has an edge, or my strategy doesn't have an edge. This would be the institutional approach. But what we do as retail trader, I lost 7 trades, oh, this doesn't work. Read Mark Douglas, everybody. I will make money in a series of 10, 20, 30. 7 trades is nothing. 10 trades is nothing. 20 trades is nothing. And how we get to know, you know, the false expectations. You know, how many of us still today think, or used to think, I was one of them, we used to think, oh, I really need just 1 home run to be a millionaire or to be profitable. I just need one trade, you know, to make, I just need one home run. I'm going to put 50% risk, I'm going to lot 50 lots. I just need one home run. How many of us still today think like this? Wrong mindset. What is the correct mindset? Money is a consequence and money will follow in a series of 10, 20, 30 trades. Kimbo, do strategies can lose their edge with time? I don't know, Kimbo. Difficult question. I don't know. I believe not. Well, Kimbo, I'm going to answer like this, right? Until the Forex market, it's nothing more than a contract between the two countries. Okay, Kimbo? Until the Forex market is going to go from the upper band on the monthly chart to the lower band and to the upper band and again down, until the Forex market is going to be the Forex market, then my answer to you is no. The strategy, you know, because it's always the same, the strategy cannot lose edge with time. Okay? But I don't have enough knowledge, Kimbo, about the stock market or crypto market or the options market. But we can, at least in theory, right? If the market remains the same, fundamentally, structurally, then the strategy, I would say no. Eddington, you have also a lot of experience. What do you think about Kimbo's question? Okay, Kimbo, this is my answer, but you know, take it with, I really don't know. I would say so here is the logic behind my answer. If the Forex market is going to continue to work like this between the monthly bands on most of the pairs, then your strategy is not going to lose the edge. Because it doesn't make sense, right? It's always the same. Great question, Kimbo. Okay. Oh, let me see in here. We talked about secretly lose. We talked about need to belong to a group. We talked about I need to make money, right? We talked about creating false expectations. We talked about the need to have the need of having control over things. We talked about need to make money again. Your trading plan. We have one more here. Everybody, this is our last lesson. We're going to be back December 20th, December 20. Okay, so until there, introspect. Why trading is so simple and yet so hard? Introspect, look at yourself and answer. Why are you trading? Why are you trading? If money is a consequence of a well-executed strategy, why are you trading? Next, what do you want from trading? Why are you doing this? Why aren't you a doctor, lawyer, entrepreneur, pizza man, Uber driver? What do you want from trading? Why do you want to be a trader, right? So similar question, you know, what do you want from trading? It's money, it's the freedom, it's the... You can trade from Alaska or with the mountain or a desert island. What do you want from trading? Why do you want to be a trader? Why not a doctor, lawyer, entrepreneur, Uber driver, gardener? When you want something that you never had, you have to do something that you've never done. Shola is asking, does Forex trading training have the same syllabus? Shola, would you be so kind and be more specific? I don't understand your question, Shola. Everybody, when you want something that you've never had, you have to do something that you've never done. What would be this one, boss? Well, follow the strategy rules. Execute the strategy. Work on yourself. if you want to have something that you've never had, you need to do something that you've never done. Only 20% out of 100 students of mine, they are doing what it's required. They've done what is required. Make sense? The other 20 never finish the course, too difficult, too time demanding, I need to dedicate too much time, I need to work on myself, I need to journal, and 60, finish the course but no big change in lifestyle, no Lambo, no Ferrari, They are making a few $100, maybe a few $1,000, but no big change. Makes sense? Still up and down, maybe they live from the market, but no big. Only 20 out of 100 become financially free, rich, wealthy. Okay? Boss, what's the difference between those who succeed and those who do not succeed? They are clear on why are they trading. They are clear on what they do want from trading. And they are clear why do they want to be a professional trader. Make sense? Like 50 Cent said it best, get rich or die trying. It's going to be or this or nothing. Now, one more, right? And then we are finished for today, everybody. Good news, bad news. Good news, trading is a learnable skill. Bad news, 90% of traders fail. I'm not sure if this is bad news, so something to consider. Professional trading is considered a high performance profession. Something to consider. Professional trading is considered a high performance. Make sense, everybody? So there is not, oh, I'm going to try, or oh, I'm going to do it 50%, or I'm going to just to try 1-2 months and I'm going to see. It's not going to work. You can learn the skill, but you must become a high performance. What is high performance, boss? Dedication, commitment, patience, and so on and so on and so on. Make sense? Working hard too, but you need to work hard in the correct way. Hard work doesn't work. Make sense? Okay, everybody, our time is up. See you back on December the 20th. Remember the homework. Where is the homework? Homework. Wrong mindset. Homework. Journal your expectations for the trade and figure out your expectations about this profession. Does Advanced Forex Trading School have the same teaching? Shola, I still don't get your... So, I'm going to try to answer. So, Shola, in the advanced course, we are over this one. This is the analyst part. Okay, but of course, you have doubts, questions, you can still ask. But otherwise, you asking questions about the Forex course 101, the advanced course has nothing to do. Okay, so we are not going to talk anymore on this. We're going to talk about the other stuff. Make sense? Okay, everybody, thank you for your time. See you December 20th. Okay, until then, work on yourself, do the homework, start to read psychological books. Okay, have a great weekend, have a great week, everybody. This is FX Freedom.